Okay, yesterday I received a comment from one of the subscribers, Homie Badger. He said, when would you sell your leaps? I'm having a hard time coming up with a good exit strategy because I got some Palantir leaps, and the more I wait, the lesser the option value will be. First of all, thanks for commenting, it really helps the channel grow. And then second of all, it really got me thinking because I never really thought of the exit strategies, but I have them in the back of my mind. It's always nice to have the plan on paper because like they say, failing to plan is planning to fail, right? So my response for Homie Badger here is that it really depends. And this isn't a generic answer because ultimately everyone's answer would be different. There wouldn't be a one-size-fits-all answer here. In my opinion, it depends on a couple factors. Is how much conviction you have in the stock. Like what is the realistic target for this Palantir stock? Do you think it'll actually hit the moon to $100+ within the next couple years? Or do you think it's overhyped right now because it jumped 3 times in 1 month? I'm sure there are people on both these boats. So which one are you? One of the easiest ways to test how much conviction you have in the stock is that imagine the stock price tanked 50% down. So from about $27 to $13.50 in the next couple weeks. What would you do? If your answer is I'm getting the hell out of there, I'm deep in the red right now, then maybe your conviction isn't so strong. We say the price will be $100 in a couple years. So if we really truly believe that, then any price under 100 would be a discount, right? So if it dropped to $13, $14, that means there's more upsides to it and it may be an opportunity to buy more. And then number 2, your entry points. When did you buy these stock options? Did you buy it when it was $10, $15, $20, $25, or even $30? Because each of those points, you would react differently. For myself, I entered really early, like around $10. I think my average is a little bit above $10 right now at $11.31 because I sold some puts and then sold some calls. So it blended together to be about $11. For myself, since I have that much of a buffer, I didn't make any moves. Even when the stock tanked to about like $22, $23 last week, I just sat still because of the huge buffer. Even at 22, I was up 100%. And then there's number 3, bet sizing. Like how much are you invested in the stock? Does it represent like 20% or 50% of your portfolio? If that's the case, and the amount kind of affects your lifestyle, so that when the stock moves like up or down 5-10%, you'll be emotionally attached, then the bet sizing may be a little bit high. So the easy gauge is that how well do you sleep at night? If it's a moderate amount, then you won't care about these 10-20% fluctuations. And then there's number 4, your time frame. If you're just planning to hold the stock for a couple months, it may be time to take the profits and get out because you did double your money for the past month. And as I always say, it is never wrong to take profits off the table. Because once it's off the table, then you can invest that into other opportunities and go from there. By not taking anything off the table, let's say if your money doubled, you're essentially parlaying your bets. So anything would be magnified, either up or down. Everything would be doubled right now. If this was a true investment, like my dividends portfolio or my growth portfolio, I haven't looked at the stock price for the last couple months because I'm in it for like 5-10 years. So the short-term fluctuations really doesn't matter for me. So we need to determine if we're speculating or investing. If we're speculating, then it's never wrong to take profits. If we're investing, then we just buy more when the stock goes down. All right, now let's look at a couple strategies. Okay, number 1, let's say if you're really conservative. Something that you may consider doing is taking your original amount off. So essentially selling your original dollar amount. Let's say if you're in for 5,000 and right now is worth 20 or 15 right now, then we sell 5,000 of it and just put it in our pockets. So sell original dollar amount And what did we do with the rest of it? If we're still convicted, then we would sell these options and move it to a further date because the time decay is eating into our option premiums day by day. So we have these current option contracts right now. We'll sell it and move it to something in the future. Maybe in 2023. And we're going to buy some of those contracts. And by doing this move with the leaps, you can also take some off the table as well. Because if your premiums here were $10 and you bought something out for $8, then you're capitalizing $200 per contract while you buy more time. And what kind of premiums are we buying? That again falls back to how convicted you are. If you're the ultra bull, it's got to be something out of the money. The stock right now is at 27. We buy something in the 35s, 40, 50 range even, depending on how bullish you are. And that was a play for the ultra bulls. And what these ultra bulls may do is that they'll sell these contracts right now and buy something at the highest premium and the furthest day out, because they're planning to hold it for 2 or 3 years and maybe continuously do these actions once it hits that premium they put. Let's say if they buy the $60 premiums by 23, and when it reaches $60, they'll sell it and move it outwards to $100 out in 24 or 25. They'll just keep on doing this. And this action is called letting it ride. So they're not taking anything off the table and they're just putting it all in. It all falls back on how much conviction you have on the stock and the bet sizing and such we talked about. But always remember this, it's never wrong to take profits off the table. And in fact, I'm gonna do it right now. Okay, so here are my Palantir positions. I have 6,500 shares. And then these long call options for January 2022 at $20 has gone up 4 times plus. So for me, I'm going to take some off the table and throw it a little bit further out. Okay, right now the option's at about $13. I'm going to roll it. I'm going to roll it further out to 2023 at maybe $35 strikes because I already have some positions there and I want to keep it like consolidated. What I'm doing is roll position to 2023 at about $35 calls. So right here, $35 call, 2023. Roll option. Okay, as I mentioned before, it shows a negative because what I'm buying in the future costs less than what I'm selling. So I'm gaining a credit as well. I'm taking a little bit of money off the table while buying more time. Something in between. As I mentioned, it may be hard to pull off because they're simultaneously doing 2 moves at the same time. I'm just going to do 5 contracts, credit of $90. So I get a credit of $450. We'll try to execute it and see what happens. Order filled. So we see this position we have for Jan 2022, $20 call, has dropped 5 in contract, while this one, the Jan 2023, $35 contract has gone up by 5. What my play is for Palantir is try to remain about 10,000 shares of exposure. I have 65 here with the normal shares and then 20 and 15. So together that's 35 times 100. That's another 3,500. So together there's a 10,000. So another thing to consider is when to roll your positions. We don't do this action randomly. Today the stock has gone up maybe like 4%. And when the stock shoots up like this, the premiums for something that expires a little bit closer definitely goes up more than something that expires much further away. So there is a bigger gap in differential. And we'll take every edge we can get in the options market. For instance, when it dropped 10% yesterday, these leaps in 2022 definitely fell more than these leaps in 2023. So your differential is bigger. So it's out of your favor. So you're losing some differential there. Anyways, that was a response to Homie Badger's comment. If you have any questions, comment down below and I would love to address them in a later video. Like and subscribe if you found any value in the video. Thanks for watching, take care, and I'll see you in the next one.